Welcome everyone to Vested Interest. This is Shane back again for the Stock Pick of the Day video. Today we are going to cover UPS out of the industrial sector. It is August 28th, quickly wrapping up another month here, heading into September. So don't miss the stocks to buy for September video that will be coming out here. I'll probably push it out on Friday, the first day of September. But for today, let's jump in and take a look at UPS. If you want to know more about this company, check them out, www.ups.com. That is their homepage. That's www.ups.com. It all started with $100 in 1907. Two teenage entrepreneurs created what will become the world's largest package delivery service, starting in Seattle basement with $100 loan. Claude, Ryan, and Jim Casey opened the American Messenger Company, right? And then they quickly became the United Postal Service, United Parcel Service. Here you can see one of their first trucks. Pretty cool to see some of these old photos. Let's keep on rolling. Now, the reason we are taking a look at them today, they were down 0.02%, not a big drop, but there was a lot of green in the market today. Today was one of those days that you looked around and it just was a sea of green. So this was one of the few ones that was down. We are talking about United Parcel Service, ticker UPS. $168.84 is where they closed out the day. They have a 52-week range as low as $154.87, as high as $200.96. They are trending back towards their 52-week low. Not quite there yet. Average volume 3.5 billion. Today's was 1.9. Market cap of 144.265 billion. A beta of 1.08. So they are more volatile than the overall stock market. Price to earnings ratio, pretty low, $14.64 per share. Would be a little bit lower if it pulled back towards this 52-week low here. Earnings per share is very nice, $11.53 per share. Earnings date, the next one is coming up October 26th, 2023. For dividends, $6.48 paid out on the year. They are a quarterly payer. We will see that here in a little bit. Very nice dividend yield, 3.84% dividend yield here. Ex-dividend date, May 12th. Which that one was a long time ago. It looks like they just paid out on August 31st. Big delay between their ex-dividend date and their payout date for whatever reason. And Yahoo Finance has a one-year target estimate of $189.67. So they don't see them quite hitting their 52-week high again, at least in the next year. And I'm not affiliated with Yahoo Finance. It's one of the sources I like to go to for information. Now, I like to jump under statistics, look at dividend yield theory here. And to do that, we look at their 5-year dividend yield average, which is 2.97. We compare it to their current 3.84%, or over here where it says forward annual, same number, 3.84%. If this number is higher, which it is, that speaks to potential undervaluation according to dividend yield theory. If this number was lower than their 5-year average, that would speak to overvaluation, again, at least according to dividend yield theory. Payout ratio, pretty low on this one, under the 75% that I look for, 54.47%. Very nice here. And when you look at these companies, you want to jump in and look at their financials. A lot of good information under this tab here. You'll find their balance sheet, their income statement. Is their revenue growing? Are they paying down their debt? Do they have assets over liabilities? You want more assets over liabilities. All that good information. What we like to look at here on the dividend growth channel Vested Interest, we like to look at free cash flow because we want growing dividends, and dividends are paid out of growing free cash flow. 2019, 8.6 billion, 2020, 5 billion, so decrease there from 2019 to 2020, 2021 up to 10.8, jump back up. 2021 to 2022, a bit of a decrease down to 9.3 billion. Overall, from 2019 to 2022, there is an increase in free cash flow, even though it is kind of up and down here. You can see they are repurchasing their own shares as well, which is nice to see. Now, if you'll notice in 2022, part of the reason they didn't have an increase from 2021 to 2022 is they bought back a significant amount of shares as well. So see that 3.5 billion or 3.5 million shares that they bought back here, right? So that would account for the decrease from 2021 to 2022 plus some, right? They would have probably been around the 12, a little over 12 billion range here. So it would have been a nice steady increase from 2021 to 2022. Whenever I see that, I see a company maybe has a little less free cash flow from the year before, but they are increasing their repurchase of stocks. I am okay with that, as well as if they made an acquisition or they paid down a lot of debt. Depends on what they are doing with the free cash flow, but we do want it growing over time, and that is what we're seeing here. Now, I always recommend more than one source. So another one I like is stockanalysis.com. You pick out whatever sources you want. You don't have to use these ones. Just make sure that you are picking two sources to look at so you can back check the information you are getting is accurate. Sometimes these sites do not update regularly. Sometimes the information is outdated. Sometimes it is just flat out wrong. So make sure you have a couple sites, 2, even 3, that you can look at and make sure you're back checking what you're getting is accurate. I like Stock Analysis because of the way they present the information, and they have stock analysts that have taken a look at this. 20 of them in this case have taken a look at UPS, and they call it a consensus buy. And if you were to go to stockanalysis.com, you'd be able to click on here. This would be a strong sell, this would be a hold, this would be a buy, which is where they rate it, and this would be a strong buy, and you'd be able to see how many of these 20 rate it in each category. Now, they have a low estimate of $100. That would be a significant drop, 40.77% decrease from where it currently sits. They have an average estimate of $189.85. That is very much in line with what we saw from Yahoo Finance. That would be a 12.44% increase in the stock price. And if it happened to hit their high of $225 estimate, that would be a 33.26% increase. All the while, you could collect that 3.8% dividend yield, at least where they currently sit. Now, I like to look under statistics. You can find a lot of good information under statistics. We're going to look at return on equity and return on invested capital, ROE. I like 10% or better for both. And 52.1% for return on equity. Very, very high number here. Very, very nice to see. Return on invested capital, twice as what I like to see, 21.0%. And if you will notice, we are looking at something in addition that we don't typically cover, but we are adding this in as part of the, and you'll see here in a minute on the vested interest stock screener slide, I have added this as a new metric to look at. So the future videos will have this going forward. I am going to look at I'm really looking for earnings per share growth, right? I want 5% or better, but looking for positive numbers anyway. This is 2.02%, so under the 5% I am looking for. And also we want growing revenue over the last 5 years, which it is growing over the last 5 years. Really, I'm looking at the earnings per share growth. Again, you'll see that here coming up. 5% or better. 2.02% is a little low on the earnings per share growth, but if you remember from the Yahoo slide, the earnings per share is $11. So they have very high earnings per share already, but we do want their revenue and their earnings per share growth growing over time. Now let's take a look at their dividends real quick. We saw their payout ratio is in the 50% range, 56.2. I think they were showing 54 on Yahoo Finance. So we'll just cut it in the middle, call it 55 or so percent payout ratio. Still relatively low, under what I look for, 75% or lower. Dividend growth of 14.34%, very high dividend growth on this one, and with a payout ratio only in the 50s, they still have room to continue this dividend growth over time. Went back to 2020 here. Back August 21st, 2020, they were paying $1.01. February 2021, they raised it up to $1.02. February 18th, 2022, they raised it up to $1.52. Big jump up there. And they raised it again February 17th, 2023, up to $1.62. So the last couple years, 2022 into 2023, very nice dividend growth, and I would suspect if they are going to continue this growth next February, you will see another increase. Very nice numbers all the way around. The only thing I would say, I would like this company to pull back a little bit further towards their 52-week low. That would be ideal for me, but definitely one on my watch list. Very nice company overall that you're probably familiar with. You may ship packages with them. Very, very nice numbers here. Now, the vested interest stock screener, I show this on every video. You can see where I've added an additional earnings per share growth equal to or greater to its industry, or 5% plus growth, what we're looking for. And I adjusted this down here. Now they must meet 5 of 8 to be investable, or 6 of 9. This is how I set up the videos. It's also how I look at stocks to see if I am interested in investing in them. Understand the business. That's why we start with looking at the business. Growing free cash flow, that's why we have that in one of the first slides. Growing dividend over time. Dividend payout ratio of 75% or less, we covered that. Check valuation based on dividend yield theory, we covered that. Buy below current cost basis or within 15% of 52-week low. Return on invested capital, return on equity equal to or greater to its industry average, or 10% plus. And the new one, earnings per share growth equal or greater than industry, or 5% plus. And for financial companies, I like to throw in price to book. You can use it for all companies, but it is specifically relevant for financial companies. Again, it is relevant for other companies as well, but sometimes companies have a high price to book. For financial companies, 1 is considered fair value. Anything under 1, undervalued. Anything over 1, overvalued. And if you look at some other companies, like I say, they might have a higher price to book, but you can compare those to their industry average and see where they stack up. Now, again, as I said, must meet 5 of 8 to be investable. If it's a financial company, must meet 6 of 9. Well, that is it for this one. That's UPS. Let me know what you think of United Postal Service, United Parcel Service there. Is it in your portfolio? Is it one you're watching? I know there's some recent strikes going on. They seem to have cleared that up, so maybe it is one that will rebound a little bit, or they may pull back. I would love them to continue to pull back towards that 52-week low. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on the Vested Interest community. Join the growing dividend growth community here. That's what we focus on. And if you are a dividend growth investor, hit that notification bell too so you're notified whenever we put out any new content. Building a community of dividend growth investors so we can share our experiences, share stocks like this, stocks we may be avoiding altogether, tips and tricks that we've learned along the way. We cannot benefit from each other's investing, but we can benefit from our collective experiences overall, things that we've done wrong in the past, things that we've done right, the reason that we do things. Share that down below in the comment section. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company stock that you would like me to cover in the Stock Pick of the Day series, drop it down below and I will work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and can money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.